Lesson 9C, this is still part of Profitability and Liquidity, which is the third chunk in a series of 4 in little bite-sized chunks because of the topic. So the whole of Profitability and Liquidity is with Emmett. So there's your format you need to look for, and let's carry on with the lesson. We're still on profitability and liquidity. It's quite a technical topic area. It's part of learning A and B for the component 3 of the exam. So we're still looking at financial information. And for this, the key learning points are about you knowing liquidity ratios. We're going to look at learning 2. And from those 2, then you're going to be able to analyse the answers in terms of a business's performance. So you've got some key vocabulary in the scroll, and the jobs a little bit different now. We've got some different jobs to think about if you were to go into finance. Profitability and liquidity. It's quite a big topic, so rather than doing it in one great big video, one great big lesson, it's been cut up into parts. This is part 9C. So profit alone tells you very little about how an enterprise is performing financially. One enterprise might have made more profit than the other, but they might not have performed as well. Think about their costs, think about how much revenue they make, and then they've got to pay their costs, so whatever's left. So you've got to look into it a little bit more than just looking at revenue. So to evaluate the financial performance of enterprises, managers use a series of ratios. Understanding ratios. A ratio is a comparison of information, often expressed as a percentage. 2 important profitability ratios that managers use are gross profit margin and net profit margin. Now we've covered that in lesson 9A and 9B. So you've got a little bit of revision down below. In order to work out gross profit margin, you need to remember the formula. I'm not giving it to you, but you've got a hint where to find it. You go back to 9A, find bad cop, go 1 minute 22 into the video, and you write the formula there. And to get your net profit margin formula, you go back to 9A lesson, that's 9B, sorry, my mistake, it's 9B. You go back to 9B lesson and you scoot to 1 minute 23 seconds, and you'll hear the net profit margin from Larry, and you write the formula there. Liquidity ratios. These are the 2 that you need to know. So first one from Benny, current ratios. The current ratio is the most basic of liquidity ratios. Unlike some financial ratios, this is expressed as a ratio, for example, 2:1. So you need to look at how it's written, and that's how you've got to write it in your exam answers. This ratio would suggest that for every £2 of current assets, the enterprise has £1 of current liabilities. It's calculated by current assets divided by current liabilities. That's what you need to revise. Liquid capital ratio from Lord Business. The liquid capital ratio is similar to the current ratio, except for one key difference. The liquid capital ratio it removes any inventories, the posh word for stock. It removes the stock from the current assets. You calculate it by first current assets minus inventories. So that's a bracket. Remember your bid mass. Do that bit first. And then once you've got that answer, you divide it by current liabilities. So question 1 from President Business. Yes, that's his name when he's wearing the suit. Question 1. In relation to liquidity, what is the formula for current ratio? Now this is testing whether you're paying attention to the Benny ratio on the last page. So that's the clue. That's your revision card help that we'll be building shortly. Write down the current ratio for question 1. Question 2, this is where it's Lord Business. That's the Lord Business formula you had. What is the formula for liquid capital ratio? Question 3, calculate the current ratio, calculate the liquid capital ratio. A question from Wildfire. You've got the numbers for current assets, fixed assets, for the two types of liabilities and inventory, another word for stock. Fill in the formula boxes in the top right hand corner. Just to remind you, it's good practice to do that. So that's what you need to do, get the formula done and then work out your calculations. Now if you're wondering why you've got to do current ratio and liquid capital ratio for your course, or why we're doing it, well, they're looking at profitability and liquidity, if you remember. So this is about the profitability of the company. Now when you get the answers and you get the ratios, that's obviously going to give you an indication. So let's look at what that means. If the current ratio is more than 1, that means there's a healthy amount of assets compared to liabilities. For example, if the ratio comes out as 2, what that means is for every £2 of assets, there's £1 of liabilities. But you can't just rely on the current ratio because that includes stock. So that's why you do liquid capital ratio too. So once you've worked out liquid capital ratio, if you see a big leap downwards, that's possibly showing too much stock. Although if the number's low, you have a low liquid capital and a low current ratio, then it might not indicate that, because for example supermarkets work like that. They move stock very quickly. So you might sit back and go, well, hang on a second, what am I doing? Well, basically you work out both, because that's when you're looking at the business performance, the business's profitability. But you can't just have the figures on their own. You have to take into account what the business does too. You have to look at the business performance as a whole. Question 4 from Larry. You need to calculate the current ratio and calculate the liquid capital ratio you see in the boxes below. So you've been given the two figures for assets. Now remember, there are two types of assets, current and fixed term assets. You've been given two figures for liabilities, current liabilities and long-term liabilities. You've also been given inventory, and remember that's just the other word for stock. So off you go, you've got the figures. To help you out, I suggest you practice writing the formula down first so you know what numbers you need to do in what order. So first thing, follow Larry's instructions and write the formula, then do the calculation. Question 5 from Vitruvius. I really need to learn his name, but he's still Gandalf. Right, you've got lots of figures here. You've got total current assets, total fixed assets, current liabilities and inventory. Remember, that's another word for stock, and long-term liabilities. You've got two questions to fill in here, current ratio and liquid capital ratio. To help you out, in the top right hand corner, just jot down what the formulas are for both, and that will remind you what you need to use, what numbers you need to use in order to calculate it. So this is a straightforward question to practice using these ratio formulas and practice calculating it. Something odd's going on here. There's a Unikitty Lego figure dishing out exam questions. Question 6. Jasmina is worried about paying her debts in the future. She recognises the liquid capital ratio is an important measure of her ability to pay her debts. There's a formula. Liquid capital equals current assets minus inventory. You get the answer, and you divide that answer by current liabilities. You've been given the figures for Jasmina. Inventory, £2,500. Current liabilities, £1,500. Current assets, £3,850,000. Then you need to calculate the liquid capital ratio for Jasmina's company, JSG Limited. So use the numbers. Remember, inventory is the other word for stock, and you've got to take the assets first, 3,850 minus inventory, then divide it by the current liabilities. Write the answer in the box. Question 7. Damien wants to know whether he has been able to pay his debts in recent years. He has given you the following figures for last year, in a year anyway, 2017. Current assets £9,000, current liabilities £6,000. You've got the formula. Damien's given it to you to work out current ratio. Current assets divided by current liabilities. So you take the two numbers above and you divide, and you can use a calculator. You can handwrite your sums in the box below to show you working out, but as it's only 1 point, we want to see the answer. Be aware of how many points are given to you when you actually see your exam paper, and it will be laid out like this. Write your answer in the box. Question 8. Damien gives you the formula for working out the liquid capital ratio. You've got the current assets value of £9,000 and the current liabilities of £6,000. They're on this question again. And the amount of inventory, remember that's the other word for stock, is £5,400. There's the formula, liquid capital ratio equals current assets minus inventory. You've got to work that sum out first. So that is the £9,000 minus, I won't give it all away, you can work out that other figure. And once you've got that first equation answer, you then divide it by the liabilities. That will give you your liquid capital ratio, and you put the number as a ratio in the box below.